Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, February 22nd, 2023. It's now 5:55 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of October 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup 3 count, and to indicate that for end of today on the 22nd, there must be a close above 4147.60 for the price flip to the sell setup count 1. The daily chart has also printed the D wave down wave 1 and the D wave up wave A. And to print the D wave down wave 2 and the D wave up wave 1, there needs to be a tick higher than this high on February 14th, 4159.77. And price in the pre-market hours for the S&P 500 at 6:03 a.m. Central Time is 39.98. And price closed below the relative retracement disqualified up 1, which is at 39.98.51. There was a close of 39.97.34. So a close above 39.98.51 for end of day today on the 22nd would qualify the relative retracement disqualified up 1 at 39.98.51. And price closed below the baseline, and the baseline is still under the conversion line. The conversion line is headed down towards the baseline though. And major support to the downside is at the disqualified sell TDST at 39.49.70. Right above that is the trend factor disqualified down 2, should be okay support, and could be support at the disqualified momentum down, usually not even considered support, but since it's in the area of others, it could be. And I turned lines back on and zoomed in so that we can see there, and you could see that this qualified demand line was qualified and confirmed. This one became qualified, and there would need to be an open below this ongoing demand line, which for today is at 39.81.69, and that could become qualified if it opens underneath it and closes underneath it for end of day today on the 22nd. The S&P 500 weekly chart looking back to the COVID crash era 2020. I'll zoom into the current area now. And the S&P 500 weekly chart has printed the aggressive combo and sequential buy setup 1 count, and it still has time to redeem itself for end of day Friday this week to get back above 4070.56, and we'll get the sell setup count 7 back. If not, we keep the 1. And price broke under the qualified demand line here, but we don't pay attention to qualifying and confirming these lines in the weekly chart. We focus on the daily chart for that, but it's nonetheless a trend line to break, and it has broken it. And the weekly chart has printed the ATM pullback alert for the downside. And the last time that happened was during the great financial crisis, so we'll go take a look at that and compare the two. And here's the ATM pullback alert for May 10th, 2009. And you can see that it printed and gave us the alert for down after the fact. You can see there was huge downdraft during the great financial crisis, and then there was that bounce off of the low in March of 2009, and that's when it print, and it did have a little bit of downside after that, but then was pretty much upside afterwards. And then printing this ATM pullback alert for the upside June 13th after a downdraft there. So it looks very similar to this. We're getting this printed after the fact, and it looks like we'll have a downdraft here like this over here, and then maybe it can duplicate itself and then start heading up, print the up alert, and then we'll go back off to the races in a perfect world. The NDXT Big Fat Cap Megatech Equal Weighted Index. I'll zoom into the current area now to see that the NDXT has executed its big M here, so it fell below the measure rule here, and that's the black one up here, 6.5%. I don't have it extended over enough, so now it's a matter of waiting to see if it can get back to the breakout area here. The measure rule brings it down under 6,200, and the breakout point right here was almost exactly 6,200, and that's the breakout point of the bottoming diamond pattern here. The NASDAQ 100 NDXHILO, you can see up here the EMA 5 59.33 and the EMA 10 59.33, so it's dead even. And the ROC 12 is at negative 610, so that's a fail and not recommended to short the big fat cap megatechs. Even though there could be a lot more downside, we just don't know where it will stop and turn around. There's the slightest remote possibility that this could show under for end of day today on the 22nd, and this at negative 5 or positive 5, anywhere in between that, but again, that's very remote. And the KSTs here shows the intermediate term KST and the long-term KST countering each other. Intermediate term pointed down, KST pointed up, so there's still limited downside. And the New York AD overbought oversold indicator shows it crossed under zero and does have plenty of room to run to the downside to get to oversold area here. The simple moving average 10 is already there, and it looks like it bounced off of the top of the range of oversold, went back up a little, and then went back down again. So there could be limited downside for the EMA 30 in green. Maybe at worst case scenario, this horizontal line here in the neutral zone, which is at negative 225 or 10 or so, right there. And I have no idea what good news traders and investors are waiting for out of the FOMC minutes from the last meeting, and that's released at 2 p.m. Eastern Time. But that could have weight for which way the direction for price in the markets goes, up or down. The CBOE 10-year U.S. Treasury Yield Index, TNX, I'll zoom into the current area now, to see that a big W was executed, and the measure rule from B to C, and copied and moved over, You can see it was executed by going over the blue line here, and it goes up to off the charts here, probably around 5.0, and that means the TLT 20 plus year Treasury Yield Bond ETF has formed a big M that has not yet been executed. Looks like that'll be around 99.14 or so right there. So the measure rule up here from B to C, and then copied and pasted and moved over here, brings it down to off the charts like the TNX, and that will definitely be in the 90 range, possibly 89. So the bond vigilantes will have to sell off more TLT, and then once it breaks below this, then it's executed. And GLD Gold ETF executed its own big W way back in November 22. And you can see the measure rule brought it up to here. So I've been hoping that it could get past these red uptrend lines here and get back above the top of that measure rule and continue moving up, but that has not happened yet. And with the 10-year yield potentially moving up past 5.0, one has to wonder if the US dollar can hold that 103.48 to 105 range. Right now, gold is holding its own within this small range between the red uptrend lines, but if the dollar can get up to 105 and breaks through that, well, stay nimble on gold. The S&P 500 support and resistance levels big board chart shows the gray areas at the monthly simple 12 moving average and the 200 EMA. And price in the pre-market hours for the S&P 500 at 6:35 a.m. is 40.11. And to the downside is the weekly conversion line, relative retracement up 1, and the daily Bollinger Band lower band, and there's the ongoing demand line. And to the upside is the 50 EMA and the pivot point for the immediate upside. Get past that level and get back up into the 40-30, 40-40 range. Weekly 65 EMA, the downtrend line from 06-03 2021. Channel 3 low for the daily chart, R1, and the daily baseline at 40.49. And the ROC 1 closed on the pain threshold at negative 2.0. It's pointed down, and the ATR2 is at 66.21 and pointed up, and the PPO extreme went back under zero. It's at negative 0.11, and both the S&P 500 daily chart and the NASDAQ 100 daily chart AD lines start the day underneath their 21 EMA signal lines. And the New York traditional McClellan breadth oscillator to get back to zero would require 4,532 advancers over decliners to get back to zero. Yeah, it's oversold, but has a lot of room to move to the downside as we've seen. Have a great day.